Hey everyone, welcome to my YouTube channel. This is Dave Gandarillas. It's around 10:24 East Coast time. Not sure where you're coming in from around the world, but good morning, good afternoon, or good evening, depending on where you're coming from. And I welcome you to my channel. So before we get started, just a couple things I want to make sure you guys are aware of. If you want to subscribe to my channel, you click this little square right here, and then there'll be a little bell. If you want to receive email notifications, you can click that, and you'll get notified from me when I put out a new video. I've been averaging about a video a week. Um, I don't have a lot going on, so I don't want to just make videos for the heck of it. But I want to share with you some of the things I'm doing, some of the things you should consider for yourself. And so I thought it would be nice to put out another video today. So just be sure to subscribe to my channel if you like what I'm talking about and if you want to hear more. Certainly underneath the videos, make sure you check on the show more and read some of the details that I put into the description, because there might be some additional information. You can get some more insight on what the video is about. Some ways to contact me, some of the opportunities that I'm involved in, some of the things you can consider getting started with for yourself if it's for you, and more importantly, make a comment. Let me know what you think about the video. Let me know what you want to hear more about, what you want to hear less about, and any positive recommendations you can provide me to make my channel even better, because my channel is only as good as um, if the user base likes what I'm talking about and I'm sharing information that you guys are interested in. So certainly share some feedback to me. Let me know what you'd like to learn more about, and I'll do my best to put out that content. Also, make sure to go to my blog site. I have a bunch of articles and things about entrepreneurship, owning your own business, doing things for yourself, um, some lead opportunities I have where you can get started for 20 bucks, a cryptocurrency in the healthcare area that could be beneficial to get involved in for the future. It has a way to go, but it's not a bad thing to get involved in if it's something that you're interested in. So yeah, so certainly come here, check out these articles, various different areas, and you can see what's interesting to you and learn some more. All right, so certainly do that. So in terms of housekeeping, that's about all I really wanted to talk about right now. I'm going to also show you here my Facebook page. This is where I mainly interact with a lot of people from day to day. I got the messenger, so you can send a little message to me, send me a friend request, put a little note in there where you found my video or where you found me. Let me know what your interests are. Let me know who you are. If you don't have a picture or a profile page set up, make sure you send a message so I know who you are. Because I get a bunch of friend requests. Half of them don't even have an image, and I don't know anything about you, so I'm not going to randomly just click on accept friend without knowing who you are. So just send me a little message that you saw my YouTube video or something, and that's easy enough. And I look forward to sharing information with you, guiding you, sending uh, opportunities your way, you sending opportunities my way. I'll be pretty clear that I'm focused on cryptocurrencies and trading both crypto and Forex right now. That's been my main focus. I do look for lead generation, things like that, but I'm not into at the moment, and I'm not saying it's not for everybody. It's just not for me. I'm not looking for opportunities where I send money to somebody else to trade for me or do anything like that. I'm pretty much looking to make sure I can, keep ownership of my crypto and keep ownership of my Forex dollars, and do trading for myself, with addition to utilizing various softwares and techniques to improve trading strategies to, increase the probability of success of my trades. So with that being said, that's really what I want to focus in today on, is some basic technical analysis that you guys can do for yourself. Again, the opportunity I'm involved in does not require you to know technical analysis, but you as a person, you as a trader, you as someone looking to generate something for yourself, you should look to gain skills in in anything that you do, so that, because no one could take that away from you. Once you have the skill set, and you don't, no one controls what you're doing, you can set your future for yourself. Whatever you want to do, you can do once you gain the skill set. So the fact is, you don't need it right away, but as you grow your account, as you grow your position, you should really look to dig in and understand a little bit more what the Forex market is involved in and how it works, and it's all good stuff. So, hopefully you're not afraid to learning something new. You're not afraid to get a little bit outside your comfort zone, but knowing that you don't really need it to start earning money is the best thing. And as the classic, saying goes, earn while you learn. So this is a prime example of that. Of course, the company doesn't give you any financial advice. They don't tell you what to do your settings. You can follow various coaches who will provide you some data sets on data collected using the software over a longer term period to give you some confidence on, if you use this strategy, this is what's typically happened. These are the suggested possible settings that you can use. But in the end, it's going to be your choice how you set up your software. And I just want to make it very clear, none of us are financial advisors. And more importantly, I am not a technical analysis guru. I'm going to just share with you things I've learned. There's always people that know more than me. There's always people that know less than me. So right now, this is for the people that know less than I know. And hopefully I can increase your learning curve to get you to the next stage, to give you some insight on what the big market, big money is doing and how price action works, and some of the basic things that you could kind of utilize for yourself to improve your probability of trade success. So right now, I've been focused on two pairs. So in the Forex market, there's something called pairs. So there's the US dollar against the yen, and there's the euro, the euro against the dollar. So basically what this is basically showing is the strength of the US dollar against the Japanese yen, and this is showing the strength of the euro compared to the dollar. Now, if you notice in both of these pairs, there's the dollar that's involved. So they're kind of inversely proportional, right? So when the dollar goes up here and this goes up, most likely this will go down, assuming that the Japanese yen and the euro are normalized and not changing. So if the yen and the euro don't change, and the only thing that was going to change was the dollar, these two pairs would act complementary of each other. So when this goes up, this will go down. When this goes down, this will go up. So as you can see, that's not truly the case, because this is going up and this is kind of going up. So the things that kind of change that is it depending on the strength or the weakness of the yen and the strength and the weakness of the euro. But you can kind of see in generality the direction of these if you look at the US dollar currency index. So the dollar has been doing very bad. It's coming off of a lot of strength in the past, right? If you go back a little further, you can see it went up a lot and then it came down. But all this price action, if you look at it a little closer, it's all involving Fibonacci and Fibonacci retracements. Fibonacci is a core area of all the price action that's happening in the market. So what I'm going to do is I'm going to focus on the euro dollar first, and I want to show you starting on the big picture. So there's something called multi-frame analysis. So basically, when you want to understand what's going on in the market, you want to start at a bigger picture. So you want to start like maybe at the 1 week, bigger picture. So each candle represents 1 week of price action. And then you want to drive down to whatever level you're going to trade at. If you're going to be a day trader, you want to stay at the daily charts. You want to do a scalp trading. You want to do intraday charts, 1 hour, 15 minutes, whatever you decide as a trader, you got to figure out what you're comfortable with. So the lower you go, faster pace, more chaotic. You always got to keep abreast of news that's going on out there, but regardless of news, you'll hear a lot of technical analysis people tell you that price action is price action. There'll always be news. That's always going to be a constant. But price action still reacts to certain things. And if you take a look here, so for example, you have a big swing down here around the time that the virus came out. So there was a big hit to the US dollar because it looked at, there's concern and uncertainty. and we didn't know what was going to happen, right? So price action went down. But if you go and you put the Fibonacci retracement on this move, you go from the high down to the low, you're going to see some commonalities that you're going to see over and over again. And there's three key, or maybe four, depending on the strength of the trend, price action is always going to retrace. And the lower the retracement, the stronger the trend. So when you see price action only pulling back 23% or 38%, then you know that trend is pretty strong. When it starts doing deeper retracements, then the trend that you're basically seeing the fact of the trend becoming weak and stalling out. So there's a possibility that the trend is going to change when you start seeing deeper retracements. So that's something to keep in your back pocket to consider as you're looking at the price action. But what you'll see here is during this higher time frame, and I want to show you the fact of what they call fractal. So price action at the weekly time frame is duplicated down to the 1 hour time frame. So you'll see that when I show you how the price action really works. So from high to low, you pick the pivots, and you can search on YouTube for a lot more data on Fibonacci retracements and analysis, and there's a lot of free resources on the internet. If you get involved with the company I'm involved in, there's a FOREX 101 training course that's included with the subscription, where you can learn a lot of basic analysis, support and resistance, all the trend lines, and go into higher analysis techniques such as Fibonacci, Elliott wave, wedge patterns, head and shoulder patterns, all these different things. So it's included with the price of the subscription of the software that you'll be licensing. So you'll get that as an added benefit to assist you in developing the skill set to be a trader. So again, like I said, you don't need to know this stuff to get involved with the software license and running it against your personal broker account and doing the trading for yourself. The manual, it will require you to manually click a button to accept the trade, but you don't have to go and do all the analysis on the stop loss, target prices, all that. The software will do all that upon you approving the trade. So it'll give you the suggested targets, and a lot of it's based on Fibonacci. When you start really understanding the software, you'll see a lot of it's based on Fibonacci and cost averaging and momentum and RSI and Bollinger Bands. All these different things have been put into place to come up with trading ideas and take away the complexity of you being a brand new person not knowing all this stuff. So when you do a pivot high to a pivot low, there's typical retracement levels that price action always does. One of the common ones, 38.2. The next one is 50%, 55%. Then there's, of course, a 61.8, and then the golden pocket, which we kind of refer to as 65%. And then in following some other technical analysis on YouTube, I found that they also talk about the 70.2 range, which I threw on here. But for the most part, you'll want to start focusing in on the 50, the 55, and the 61.8. That's pretty much the range that traders will start entering positions and cost averaging into a position, assuming that there's going to be a direction change once this price target hits. So right here you can see there was some action at the 55, and it didn't actually touch the 61.8, but you can see within that range I just spoke about, there's some rejections happening, and if you look back, there is some resistance levels in this range as well. So it's all not happening randomly. It's all programmed into big money algorithms. Big banks, they don't have people sitting there doing trades for them. They have software that they're running, and they've programmed in these various Fibonacci levels to either drive the price higher, drive the price lower. And a lot of times you'll see this negative 23.6. So there'll be a price action, there'll be a fib retracement rejection, and then the algorithms will push the price down to this target. So that's why I have this on here as well. Now, I'm going to drive down a little bit deeper. So you saw that there's some action happening in this range here. Now let's go down to the daily time frame. Let me remove this and let's start over. So let's kind of consolidate a little bit here. So now you can see smaller time frame on this, and you're going to start seeing like so. So for example, you start looking at these pivots. You look from the high to the low, and you can see again something happened here, and then it drove back down. Now it didn't go down to here yet, but it had rejection here. So if you were looking to get into a trade, you can start putting in positions here and building your position, and with the idea that this will change. Now you could bring in other things such as RSI and Bollinger Bands and some other things to make it even higher confluence, as they call it. When you have multiple indicators and things all saying the same thing, that pretty much increases the odds of success. All right, so that was a high to low with a retracement that hit that range. Now let's look at a low to another high to low. Actually, a low to high. So this pivot happened. It hit the 60, the 55, and now it came down. So let's look at the low to high. Now again, you can see this is not by chance. Let me zoom in here a little bit. You can see price action started reacting in the 618. It came down to the 702, and it pushed back up. So if you were able to start building a position down here, you could have entered it and got out with the retracement. Now the point is not to get greedy. You want to understand what can happen now. So if you were getting in here, the idea would be next is, okay, let me figure out where it could possibly go. And to do that, you would look at the next pivot. You would look at from high to low and how high this can come up before this possible rejection going to happen. So assume that you got in somewhere down here. What you would do next is once that pivot is in and you're in your position, you would go and you would check the next pivots. You would check these two. So you got in here, and now based on what I was telling you, that price action typically happens on the 50, the 55, and the 618. You can set your target somewhere up here before this all happens. So when you're in the trade, this stuff didn't happen yet. So you would be picking a target somewhere up in here to get out of your trade, because you know retracements typically can go back to 50, 55, and 618. So that's how you would enter a trade, and then you would know to start getting out of the position somewhere around 50, maybe get some more out at 55, maybe get it all out at 50, whatever it is, and you would be able to pick your targets a little bit better by knowing the typical retracements that you can see here. Let's do this again. So assume that you're going to go short. This time it was a little lower, so it broke this threshold. So that would be 100% retracement. But if you really wanted to, you could pick a target to get out somewhere around here. So you would have been out, if you were to get back into a short here, you would be getting out somewhere in the 50 to 61.8 or 65 range. And if you wanted to keep some of it for a chance it would go lower, then you couldn't stay lower, but you probably would have been out of the trade when it hit here. So again, assuming that you got in somewhere down here, now you want to see how far it can go up, you would go and you would check this. So this is the pivot down, and then you saw, look, it goes up, it hit the 61.8 and got rejected. Then it went up and it hit the 55 and got rejected. So this is the range you would have set your, after you get in down here, you would set your target to get out somewhere over here. Now, there's no way that you'll know that it'll go this high, but this is the typical process of you picking targets by looking at the fib pivots and the possible retracement. So you can see this was kind of consolidation phase, which makes it kind of hard to do trading. But if you analyze it correctly, you can get a pretty good idea of what's going on. So let's go even deeper. Let's go down here and look at the hourly chart. All right, so let's just assume maybe you saw that this was coming back down, and RSI was high enough and you decided to get in. So let's just check real quick with this Fibonacci retrace. So from high to low, I'm sorry, what you want to do, so if you got in up here, what you want to do is you want to check from here to here. And again, look, right around the 55, even up here. So in this range right here, if you would have saw this pivot and you were comfortable with getting in up here or averaging into a position up here based on RSI or Bollinger Bands and oversold, overbought conditions, you could have gotten in here, and then you could have figured out, okay, from low to high, that's the low to high swing. Typically, it'll go down 50%. So you could start setting your targets here, maybe 50% here, 25% here, and then the last 25% here. And scale you, just like you scaled yourself into a trade, you can scale yourself out of a trade. So now, assuming, see here, look, here's another 702. See how it kind of had the price action here. Now, of course, if you look back, you'll see that there's probably some resistance and things that are also having confluence with this level. But at a minimum, you could always look at this range. This is a ongoing thing. You saw how it was happening on the monthly level. Now you see how it's happening at the hourly level. So again, assume that you got into a trade down here and you want to know where to get out. You do the next pivot. Right here, look, it hit the 50. It touched the 50 and bounced off. Then it kind of blew by, hit the 702, came down. So if you would have got in somewhere down here, you could have start scaling yourself out at 0.5, 0.55, 0.618. And you would have been out like 50% here, 25%, and the final 25%. Depending on how you want to do it. That's going to be your trading strategy, and I can't tell you how you want to get out. But I will suggest not buying all in on one trade and maybe buy 20% at a time to make a cost average position down here, and then the same thing, get out of the trade the same way, 50%, 25%, 25%. That's just locking in profits. And once you get up to a certain point, another thing you'll do is, instead of having your stop loss set down here, once your price action has moved 10 to 15 pips away from your entry price, you most likely will want to move your stop loss to break even. So in case there's some inadvertent change in direction, you won't lose anything, you won't make anything, but not losing anything is making something. You got to think about that. You can't worry about staying into a trade and chasing it, thinking it's going to come back. Reducing your risk and setting it to break even is a very important area that you should consider doing once action has moved far enough away. Maybe even put in a trailing stop loss, to track price movement by 5 pips or 10 pips away from where it is. And if it changes direction, boom, you're out, you've locked in some profit, and on to the next one. All right, so assuming again, look, assume you got out of here with a buy, and now you want to get into a short. So you're buying in up here. What do? You want to see, you got in up here, now you want to see where it can go down to. Now you'll want to do another Fibonacci retracement. So you pick the low to the high, and you got in up here, and now you want to see how far it can go. So look, this is ironic. Look how close to touching the 55. So you would have cost averaged into a position up here, and if you were smart, you would have sold you would have sold probably 50% of your position right here, and now you're waiting for the next one. Will it hit the 55? Will it hit the 618? Or you could just decide to sell it all, call it a day, and move on and wait for the next setup. Now, waiting for the next setup is you would be targeting, let me see where my tools are. Assume that you got out at the 50. Right now, you'd be looking, let me get off this. If you're going to look for a buy, you'd be looking for averaging into a buy right here. So I'm going to leave this box here. Now let's see what happens when price action hits this later on, and maybe I'll follow up in another video and see if it bounced off. The retracements are, personally, I'm looking for this to go lower, but you can't disregard the fact that it typically bounces off here. So you have to look at the the RSI and other things to see how weak or oversold it is, and other things that come in advance. But I don't want to get involved with that because I don't want to make it too complicated. I just want to focus on the Fibonacci for you guys today. So that's how you do it. It's, you know, you can use Fibonacci extensions for targets as well, but I kind of just focus in on price action. I pick the pivots. Like for example, if somehow I got in up here for a sell, again, let me just show you this one more time so you'll see how strong this is. Say I got in up here for a sell. What you do is you go back to previous action. You look left. You pick the high to low, the low to high. And then you see, okay, well, I'm up in here. Where do I want to sell? So you use this Fibonacci retracement to know that typically after a big move in one direction, retracements happen down at least 50%. Most of the time it hits 55, and a lot of times it goes down to 61 or 65. In this case, this was a very deep retracement, but there's nothing wrong with getting in up here. Actually, let me make sure. Let me put on my magnet to make sure I get these pivots correct. You know, there's nothing wrong with getting into a position up here and just getting out at 50. You know, there's another trade that's going to be set. If you got out here, what you should be doing is you should be taking the little box. By the way, this is Trading View I'm using. I don't know if I said that, but for some reason, if you got out of the trade here, now your next step is to figure out, okay, when does it make sense for me to get into another trade? And you could start building a position all along the way here, right? After it hits 50, if you got out at 50, you don't want to get right in probably. You probably want to wait for it to go down to 55 or 618. But in this range is your position. So maybe you're buying 20% here, 20% here, 20% here, 20, you know, however you want to get into a trade. You want to cost average yourself into a composite position that's somewhere in this range. And then from there, once you're in on that trade, now assuming that, you know, this price action has happened, so you know the pivot. Let me get rid of this. So now you know you're in here. You got in here somewhere, but you also know that the high to low already happened. So now you take that and you go and you set it up. So once you're in on your trade over here, now you're going to start picking your points of when to get out. And this would be the target of you getting out somewhere in this range. And this is going to come with you being comfortable and how you want to proceed with your trades. But, you know, take the profits. And after this, you know, just realize every dollar that you make or every couple dollars you make, every pip you make, build your account. And then from there, the compounding effect happens. And I showed you that in the last video, but I'm going to finish it here with just showing you that calculator real quick. But just realize every time you close out a trade, your next trade, you have more equity, you have more leverage, you have more capabilities to build your portfolio even faster. You know, every dollar that's in will give you, depending on your leverage, you know, every dollar you make gives you either 200 to 500 more for the next trade to use against. So don't get greedy, be conservative, but be consistent. Come up with a trading plan. Don't change your plan. Come up with requirements to get into a trade. More importantly, focus on the reasons why not to trade. Because not trading and not losing a dollar is making money because you're not going backwards. So be very specific, be very consistent, be patient. The trade is going to be there. You don't have to be in the market 24/7. The problem that most people have is they overtrade. And that's what causes them to lose money because they feel like they have to be in the trade every minute of the day, as opposed to sitting back, setting up, you know, setting up traps for the price action to go into the range that you're looking for, and use, like, you know, when you get better, you can use RSI and other things to make them even higher probability. And from there, you know, just understanding Fibonacci. Fibonacci is one of the basic things that every trader should learn, and that's one of the first things I suggest you guys learning, so that, you know, you can become successful. Now, going back to the software, You don't need to know this to start the software. You don't need to know this to start making money using the software. This is live trading. I will not tell you that there's a guarantee to make money, but if you use proper risk management, using the software will take out the emotions, will take out the changes in mindset that you might have during a trade where, oh, you know what, it'll come back. Let me just change that stop loss a little higher and it's going to move soon. Those are the things that the software takes away from you doing because you're human. Human have emotions, and the emotions are what causes a lot of traders to either get greedy or to put more money against it when they shouldn't. And I think it's a big benefit for new traders and even seasoned traders to use the software as a tool to increase the probability of success even more. So with that being said, I'm going to stop here. Even though I had some other charts here, I think I showed very well in the one chart about Fibonacci, and that was my goal. Start at the higher time frame, move your way down, get a big picture of where price action is. Is it going up? Is it going down? And then figure out if it's a strong trend or a weak trend, if there's a chance for a reversal. All those kind of things have to be put into place. But again, I want to stress the point. If you do want to get involved with trading, you don't need to know everything. You just need to purchase the license to use the software, apply it against your broker account where you hold your money, and then turn it on and accept the trades that you want to accept and don't accept the trades that you don't want to accept. But by knowing some of this other stuff, you could really put yourself in a good position. If you see price action coming down here and the software saying to buy, then you could kind of confirm that, okay, that's a strong position. Let me accept that trade. Or if it starts saying to buy here, maybe you say no and you wait for price action to get down here and then you say yes. So it'll continue sending you alerts to get into a trade. And by knowing this stuff, you can really increase the profits and things with the trading software by using your techniques that you know personally. So it's meant as a tool. It's not one of those set it and forget it. You're not sending money into another company's wallet for them to do trading for you. You're managing your own money in your own broker account, and you're just applying the software with the settings that you set, and with the you have to interact. You have to actually hit approve. So you're in a loop. It's good because you can control how much you want to be in the market, how much you don't want to be in the market. You can work it around your schedule, and a lot of people are having great success. I can't show you the success because I'm not a financial advisor. I'm not allowed to show you profitability and all that kind of stuff just for compliance purposes. We want this company to be around for a long time. We want the software to be around for a long time. It's life-changing. You can start with, I would say, let me get into this income calculator with you. To be successful with the software, you got to come in at least with 1,000. You got to, because, well, it depends what your goal is. I mean, the goal is to try to at least cover the cost of the software so that it's a profitable situation. Now, there's nothing wrong with getting started and putting money out of the pocket for a couple months as you build your equity in your account. But I would suggest coming in, utilizing some of your tax returns or whatever, and setting yourself up for success. I found the sweet spot, when I first got started, and based on my analysis on how things could play out, is, if you could start with like $3,000, and again, this is in your account. You're not sending this to somebody else. It's your money in your account, and you could take it out whenever you want. I'm not telling you what to do. I'm just giving you, based on my mathematical analysis on how the software works and how you can, do things, how you could become profitable. And from what I've come across, let's just run some numbers for you. Let's do 3,000 as a start, and let's assume that you set up the software and it's able to do 3% a week. So actually, you don't even need 3,000. You could probably get away with 1,500. That's 90, 180. All right, so somewhere between 1,500 and 2,000, you should be comfortable with the probability of the software generating enough to cover your cost of the license. Now, it all depends on what you can afford. You do what you can. Actually, the company suggests when you first get started, as long as you feel needed, but at least for a week or two, use a demonstration account, which is the broker provides you an account that's with fake money, but it works just like real money, except that there's a little bit of slippage and reality of timing and latency, and trade executions are ideal with a demonstration account. So you'll probably see a little bit of a difference. It's not. I didn't really notice that much of a difference, but it's basically the process of you understanding the software, setting the software on a weekly basis, understanding all the settings, understanding market news and things that the financial advisor of the company will provide you. And also you'll get some insight on different coaches. And we have Facebook pages with people's results. Again, their personal results with their personal settings. They're not really suggesting you do anything. You got to pick and choose and figure out what's good for you. But there's a lot of resources available for you to figure out the correct settings to use in your software. And what you do over those first couple of weeks is you try out the settings and you make sure, again, no one can make sure but you, but you got to use proper risk management. So with a $1,000 account, you don't want to set the lot size to 0.1. So there's some recommendations and suggestions on what the lot size should be per 1,000, and how many pairs to use, what pairs to use, trading through news, no news, all these different things. These are all the settings that you're going to get exposed to once you get started, and you'll have a chance to tie into webinars and figure out what it's all about. So getting back to here, I created this, what do you call this, the spreadsheet to kind of give you a roadmap of where you can go, depending on what you start out with, right? So if you start out, for example, if you're able to come up with $1,500, and the software on an average basis over time provides you a weekly gain of about 3%. And again, there's no guarantees here. I'm not saying that's going to be the case. You could do the what ifs, right? So you start with 3%, and you can see, like, I think there's 32 weeks left in the year. So if you start today and you work it out for 32 weeks, you can see your $1,500 at 3% a week can turn into $3,500. So you can see that you've at least doubled, and maybe like 150% of your money compounding effect. Every $45 you made this week, next week now you're making 46. Next week you're making 47. Now I'll tell you that this is the low end. And it's been really pretty good. I can't tell you exactly the range, but this is very conservative. So you'll have the ability to, go higher, from different weeks. And when you figure out 1 week at 3%, 1 week at 7%, 1 week at 5%, you'll start getting a feel for what the average is. And that's the only thing. That's basically what maybe I should actually have that, maybe average. Put that in there so that it's very clear that that's not a guarantee, and it's going to fluctuate based on holidays, market volatility. All these things come into play. So all you can do is provide yourself a roadmap of where you are today, where you can get. So for example, at 5%, if you start with 1,500 by the end of the year, look, you can get up to 4 times. So that's the compounding effect coming into play here. That's 5% every week, compounded. You can see week 1 you're making $75 a week. At week 32, now you're making $340 a week. So you got to decide what your goal is, and I kind of just show this here to give you a feel for what the annual equivalent is of 52 weeks. If you traded 52 weeks, and you got paid this much a week, this would be the income equivalent. So after 32 weeks, on a side doing just clicking approve here and there, you're generating on average about another $18,000 a year. So you want to start getting a little bit more I can't say enticement. Actually, that's non-compliant. So let me take that back. I'm not trying to entice you, but I guess the vision, the possibilities, right? So for example, if somehow you got your account up to 15,000 from either adding more money or having that available to try this, this is the numbers that will come out. So week one, you're earning $750 a week. So that's $3,000 a month at 5%. So that's equivalent to having a $40,000 job. And look, like if for example, if you could start with this today and you set your, the account's able to create 5% on average over the term, at the end of the year, this is where you'll be, $3,000 a week. That's $160,000 salary. So again, there's no guarantees, but I'm going to tell you, if you use proper risk management and you're consistent and you do the right things, you can set yourself up for success. I'm not allowed to provide any kind of guarantees, so there's a risk disclaimer. Forex markets are, you could lose all your money and more because of leverage. There's all those risks that are involved with anything. There's no risk, there's no reward, right? I mean, every single trade that you take, there's a risk and there's a reward. You have to reduce the risk and hope for the reward, right? So this is what we teach. That's what the company teaches by providing you education on Forex trading, because just by using the software alone, you get so much more insight. If, for example, you understand resistance and support, you understand RSI, you understand Bollinger Bands, you understand Fibonacci. So this is my point. You get started, you figure out the settings to use, and then along the way, from now until the end of the year, every week you're pushing and learning some more of Forex and technical analysis and understanding. You position yourself to have a skill set that no one could ever take away from you. You position yourself in a way where when you're at this point, whatever you're, there's going to be that crossover point. Well, whatever you're making a year now, when you're generating that on the side, there's a crossover point where you start paying off your bills, you start taking care of what you need to take care of, you start diversifying, you pull money out, you do something else with it. There's that level. You got to figure out what that level is. You set up a number, you set up a possibility of where it could be, and then you figure out what that number is. So if 100,000 is your number, then the possibility is within, what is that, 21 days? So that's 5 to 6 months. Oh, 21 days. No, 21 weeks, I'm sorry. So that's about, what, 3 months, 4 months? No, 5 months. It's actually about 5 months. So approximately about 5 months, this is where you can be. And you should consider really allowing the money to grow for you to whatever level you're comfortable with. And then from there, take it out, pay down debt, diversify, get into cryptocurrencies, buy yourself a house, buy multiple houses, buy real estate, get involved with the stock market, start diversifying so you have multiple streams of income. This is a conduit and a way for you to get started if you haven't started with anything. And if you already started and you have money, this is another stream of income that you could start taking advantage of. And, of course, like I said, there's always risk. I don't want to go any further here because it's already almost 45 minutes for this video. But I did want to show the possibilities. And this, if you decide to join my team on the Forex trading software, I will. I'll give you this Excel spreadsheet. This is done on a PC, not a Mac. But I'll give you the spreadsheet, and you could do what if scenarios. For example, if somehow you were able to do 7%, this is what it looks like. It gives you a roadmap and it keeps you inspired to, okay, you know what, maybe last week I only did 4%, but this week I did 10%, and on average it's 7%. So you start feeling the ebbs and flows, the ups, ups and downs and things of the nature of Forex and any kind of investment, right? You're investing in yourself, you're investing your money into your account, and you're utilizing the software as a tool to increase the probability of success for your trades by taking out the emotions. You're in control of all your money. Your money is placed into your broker that you decide what broker you want to use, All you do is you make the connection to the software to interact with your broker. The software does not have access to withdraw funds or anything. There's a special API level software interface that allows signals in and signals out for the software to control, but it doesn't have the ability to take out your money or anything like that. So there's a separate set of passwords that you use for specific access for the software, and then you have a separate set of passwords from your broker that you have access to putting deposits in your broker and taking money out. So the only limitations you have in terms of your money in your broker is whatever limitations the broker has in terms of deposit and withdrawal limits. So you have to do your research. The company doesn't tell you what broker to go to. Because we're not financial advisors, we're not allowed to do that. It's up to you, and that's what makes it so agnostic, where there's no fishy things going on, because you're allowed to, they're unbiased. You're totally allowed to pick whatever broker, as long as they have the MT4 platform expert advisor interface capability. You can pick whatever broker you want to go to, and some recommendations on what to look for when you decide to pick a broker, but the company does not tell you what broker to go to. I can share with you when the time comes what broker I use, what brokers I'm aware of. But again, it's going to be your final decision on where you go, how much you put in, what settings you set. Everything is user controlled. There's guidance and there's ideas of different people and what they're doing and strategies. But in the end, you pick and choose what you want to do for yourself. So that's one thing I love about this opportunity, is you're in 100% control of your money, your future, how you want to do your software trading, when you want to trade, when you don't want to trade, when you want to take money out, when you want to add more money. There's no hoping that the system is around in a year, to get your money out, because your money is in your broker. So you have to pick a solid broker, of course, but there's no worry that the system's going to shut down and they're going to turn withdrawals off and all this stuff that you probably know about and hear about. That's one of the reasons why I've shied away from those systems, and I've focused more on this type of system where you're in 100% control of your money and your future. So if this is interesting to you, I strongly advise you to reach out to me, to connect with me, and ask some more questions about this. I can put you into a webinar where you can learn more about it. I could put you in some Facebook groups to allow you access to other people's results and leadership, and you can ask some questions in there. Certainly come to me first, but the fact is that there's a team out there of customers and affiliates. You don't have to build the business. You could just be a customer. One of the requirements for a lot of companies that you have to have at least 55% customers and 45% people that are trying to build a business to be considered a legitimate company. So the company is happy with a lot of customers. The software works. They're making subscription dollars on you purchasing the licensing for a month with the software. You're happy, they're happy. The fact is, you could, with $1,500 or $2,000, you could more than cover the cost of the software on a monthly basis. So anyway, that's it for me. Again, I hope you enjoyed the video. I hope you got some insight into price action. I didn't want to overwhelm you with too much technical analysis. And again, I am not telling you I'm a guru here. I just know what I know, and I share what I know, hoping that someone that knows less at least learns what I know. And then ideally we'll continue moving forward and learning more than I know, because I know I don't know everything. And what do they say? The more you know you don't know. So there's a never-ending learning philosophy in the world that you should buy into and adhere to and strive to. Learn something new every day. And as I said in my Facebook, where is it? My Facebook page, you don't try to dance better than anyone else, only try to dance better than yourself. So that's very important. Just try to be better than you were the day before, and before you know it, you're going to be a different person, and you won't even realize it happened. So, be uncomfortable, be consistent, be persistent, don't give up, set a goal, chip away on getting there, whatever that goal is. And I look forward to having you on my team. I look forward to connecting with you on Facebook. Share some comments in the video. Make sure to look at the video description and make that decision to change your life. All right? Take care.